Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Friday, September the 1st, 2017. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market, macro to micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and our hypotheses for the day. We do create multiple hypotheses in order to have a plan in place. We do not know what the market's going to do, so we set up what the probable auction could be, and then we set our plan accordingly, wait for the market to open up, and then show us who's in control and which plan is going to best suit the market for that trading session. This is a subscription room. If you're interested in checking it out, send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog. This is not a commercial venture. We do everything live here in the go-to session in the pre-market. Then we do live trading and analysis during the course of the trading day. There's probably about 500 days up on YouTube, so please watch my YouTube videos. I do put them up each day after the RTH session opens so that you can review my analysis in the auction and the hypos for the day. And if you're interested, send me a contact request at Doug_McKay, and please like and follow me on Twitter. Okay, so let's just get the disclaimer out of the way. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Taking a look at yesterday, our main hypothesis was an open auction at a range. It moved down to that 59 level. Excuse me 1 second. Sorry about that. I got something stuck in my throat. So we were looking for an open auction, responsive selling down into the 59, possibly even to the 54, and then a rotation up into the 65 and 67. That was hypo 1. Hypo 2 was the opposite, but I was giving it equal weight of open auction out of range, a move up into the 69 area, and then a rotation down into the naked VPOC from the prior day, and then finding a base and rotating up. What we got was hypo 3, but it was kind of like a hybrid hypo of hypo 3 and hypo 4. Hypo 4 was sideways consolidation, and creating a battle for the high. Hypo 3 was gap and go, a move up into the 65 to 69 area, and then base there and push up into the daily ATR, which was up here at 73, 75, possibly even up into the 80, and then fall back and close around the 69, 70 area. That was the hypo that we actually got. And you can go check out yesterday's video for that. Each morning I like to start my day with a basic, or let's do the news first. So we did have non-farm payroll. That was the big one today, and the non-farm payroll was an actual miss, and but the manufacturing payrolls was a beat. So I mean, we kind of didn't go anywhere, and then we popped, and then we came right back, and then we rotated back up. So kind of indecision in terms of how the market reacted to the news, but non-farm payrolls was a miss. It just wasn't a big enough miss to sell this market off. Nothing seems to sell this market off right now. In 36 minutes, we've got RBC manufacturing coming out of Canada. And then 51 minutes, we've got manufacturing PMI. But the next big one will be at 10 o'clock with the ISM manufacturing PMI and the Michigan consumer expectations and inflation expectations and the consumer sentiment. So a lot of news coming in at 10 o'clock on the open through to 10 o'clock. 10:30, we've got the ECR weekly annualized and weekly index. And then we've got the Baker Hughes oil rig count at 1 o'clock. And that's about it for the news. It is a holiday weekend. So just remember that you're probably going to get some traders leaving early, and the market could go sideways or drift into the close. I always like to start my day with a basic candlestick chart. I use my toss paper money. It's got live data, but I use a 9 EMA and a 20 SMA. And I'm simply looking at where we are within the different time frames and where the trend is being challenged or violated. As you can see, nowhere near violation. This trend is just unbelievably strong. We did have 5 months in a row that were positive. That hasn't happened since 2014. So very, very strong trend going. We don't even violate the trend until we get into the 2300s. Going to the weekly, we had that inside week. We talked about that on the Monday of this week and looking for the pullback to the 9 EMA, and then we came down and challenged the 20, and then we popped up, and we're trading right now, basically about 14 points off of the all-time high. So not too far away from putting new all-time highs. But the week, the challenge to the trend was mitigated, and we are now above the 9 and the 20 on the weekly. Going to the daily, we've got a nice strong move up. We did put a naked cross in here at 24.52 and a quarter, but the strength of this is strong on the daily. Going to the 4-hour, you see great slope, great separation. Trend is moving up strong on the 4-hour. On the 1-hour, same thing. On the 30-minute, same thing. We've come back and tested the 9 and then bounced so far. We did have a Mr. Sneaky technical gap that came down and closed that. And then on the 15-minute, we moved up and hit that 77, rotated back, and then on the news we spiked to the 24.78, and then we've come right back to the scene of the crime, but we're holding the 9 and the 20. And then on the 5-minute, you've got a move down below the 9 and the 20 right now. So we're seeing a little bit, for the majority of the time frames, we're trending up. We're seeing a short-term pullback and backfill. Now, I was talking before we started that 78 was actually a naked cross on the 30-minute that we put in all the way back. I've got to go to this chart right here and go all the way back to the 8th. Just it's a good example of these naked crosses that show up. What day was this? We're looking for the 8th. Here it is right here. So there's the naked crosses. It's just like naked VPOCs. They show up. Sorry, that's not the 8th. It's right here. So this one got closed out as well. This one got closed out yesterday, or in the Globex, and this one right here just got closed out on the news. So pay attention to these targets. There's another one that is on the 5-minute that is still above us. Oops. And that one, you got to go all the way back to the 8th as well, I believe. Yeah, right there. Well, that's 84. I'm looking for the one that was at 80. Right here. There it is right there. No, it's 67. I must have misread it. It's at 85, basically 84.75. So just pay attention to those. But basically, the trend is still up, and we're getting a small pullback on the smaller time frame. If we take a look at the big picture, we are back up inside of this balance area. We're trying to break out the value area high is at the 75 and a quarter, and we're currently trading one tick above that. That's going to be a key area for us today. So that's going to be our over-under line. Back inside, we're inside of this distribution zone with the microcomposite VPOC at 69. The last area they tried to hold before they fell out of balance on this Thursday right here was up at 72. So below the 75, your first target is going to be, the first major target is going to be the 72. Of course, you've got the high from yesterday at 74 and a quarter, but 72 will be the big target if we hold inside of the 75, with 69 being the extended target, and basically our gap close below. There's not much to say. If we get above the 75, I'd be looking for the overnight high to get taken out at 78, and a target of that previous all-time high in July at the 80.50, and then next resistance comes in at 84, and then of course the all-time high up at 88. Back inside of this, if we do get back inside of the 75, we could get stuck in this wick for a good portion of the day, but this market still looks very strong. So let's take a look at our overnight inventory. Oops. Take a look at our overnight inventory. You can see that we're basically 99% net positive in time and volume. We've got a double distribution with the LVN right here, just at the high of the prior RTH session. And then we've got the VPOC shifted up into the 75, and currently we're trying to attack the developing value area high at 77, and probably go and make a new high coming into the open. So if we start moving our numbers over right now, our overnight low is down at the 69. So just one tick in front of the naked VPOC, and basically right at our close from yesterday. Our current high overnight is at 78, but it looks like it's probably going to expand. We still have some time before we get to the pre-market or the RTH session. And then I doubt that we're going to get a VPOC shift, 76.75. 76.50. And then our non-farm payroll seen a crime is 74.50, which is basically one tick above the prior day range, and just above this LVN. So this LVN and the prior day range is going to be our over-under line. I'm using it instead of the 75 microcomposite value area because of the LVN and because of the prior day high, but it's going to be a slush zone. So basically it's going to go from 74 and a quarter to 75 and a quarter. And I'm going to make sure that I'm above that 75 and a quarter if I'm taking a long, and below the 74 and a quarter if I'm getting into a short. We've got a pretty good Gaussian distribution from yesterday with a valid value area. So the next area is going to be that 72. Remember that 72 is the area, the last place that they tried to hold value before they fell out of value, and where they came up to once we came back up into the value, and then we failed from there again. So that's going to be a trade area. Below that, I'm adding into any shorts into the 69 area, and then looking for support to come in down here at the 66 level, and then 62. When you get days like this, it's pretty easy to set up your levels. The major extended target below is down here at 56.50 and 56. Of course, we've got a pretty large full session 20 period average true range. It's expanding right now. It's at 1960. So off of the 1960 takes us down as a daily downside ATR target at 58.40. So just above that 56 area. I'm sorry, yeah, 58.50. And then off of the low overnight, our 20 period daily ATR upside target is 88.50. So basically, our all-time high. Don't need the critical mass. We do have weekly critical mass, but it's likely going to kick in. Our week open was 24.42, so 24.42 plus the 1960 gives us a weekly critical mass of 61.75, which is all the way down here. So basically, I'm just going to put the critical mass here. It's not likely going to be an issue today, but you never know. We might get a sell-off. Okay, so those are all the levels. Let's go to the hypothesis. It's basically going to be very similar to yesterday. We're going to open auction just outside of range. I think we're going to get some continuation today because of the fact that it is the 1st of September. So I'm looking for open auction, out of range, responsive selling, back down into the 74 to 69 area, finding our buyers down there, basing, putting in a higher low, and then pushing up through the overnight high and coming up and challenging this 80.50 and then sort of balancing between the 80.50 and the 74 and going sideways. That is hypo 1. Hypo 2 is going to be a gap and go day. Failure to get back inside of value and close the gap. Might close the range gap, but hypo 2 has us leaving the naked close alone and failing to get back into value and then rotating up through the 80, chopping between the 78 and 80, and then pushing up into challenging new all-time highs and closing near the all-time high, if not new all-time high. We've got range expansion to test that, range expansion capabilities to test that 88.50. And then hypo 3 is a open auction, out of range, push up, failure to get above the 80.50, then come down and chop between the 65 and the 75, and basically going sideways and getting stuck, in yesterday's range. And then hypo 4 is an open auction out of range, take out the overnight high, find responsive sellers, rotate down to 69, chop around in this area, and then push down towards this 58 and this gap down here, and come down and test the lower side of this distribution down towards the 60 and the half gap fill, which is at 61.50. So basically coming down here, I'm sorry, 61 and a quarter, and filling this gap. That's my main hypotheses for the ES. Just take a quick look at gold. I know we're running a little bit long because of non-farm. We talked about this the other day. We posted it in the room. Mark was asking me what I thought gold was going to do. I said I was looking for, after we put in this 31.90, I said looking for a $15 to $25 rotation. Remember, between 38 and 42, I'm looking for responsive counter rotations. That's the highest frequency on the larger time frame for gold to get counter rotating $15 to $20. So I was looking for a $15 to $25 pullback before rotating back up and moving up towards that 1350 area. We got a little bit bigger, pullback than the 25 that I was expecting, and got to 29, and then we rotated back up, and so far we're $32 into this rotation, this continuation wave that we're looking for to push up into the 1350. Areas to pay attention to today: the 25 area is the value area for the last 4 days, the value area high. Below that, look for a move down towards the 22, 23 area. Possibly even a push through down into the 14. I think that's less likely. If we get above the 31, look for them to go up and challenge the range high today, which is at 34.50, and look for resistance up at the 37.40. I don't think we're going to see much more movement in gold. More likely going to chop between the 27 and the 32, but if we do get above the 37 and go into price discovery, look for them to push up. I think the next big target is going to be just in front of that CHVN, the 48, 46 to 48 area. But we're coming back into some territory we haven't been into for a while. Anyway, that's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.